In this video, I will discuss with you 2019 paper 2, question number 3. That is from, question came from accounting equation. Actually, if you just consider question papers from 2016 to 2021, examiner has put a higher weight for the lesson accounting equation. In the accounting equation question, examiner has checked not only accounting equation, but also other lessons also. But mainly it is from accounting equation. So therefore, practicing more and more questions from accounting equation, it will help you to do the question accounting equation at your exam well. So I will select to discuss with you the question came from accounting equation in the year 2019. In the year 2019, question number 3, part 1. When you practice these type of questions again and again, it will help you to do the work paper in a correct and smooth manner. Right, here Kamal commenced a business on 1st April 2018. The balances extracted from the draft financial statement of this business as at 31st March 2019 are given below. Here you are given actually balances, ledger account balances after 1 year, after 12 months of period. All cash transactions of the business are carried out through a bank current account. It was later revealed that in preparing the draft financial statements for the year ending 31st March 2019, the following items have not been considered. That means when you prepare financial statement, especially income statement and estimate financial position and the cash flow statement, they haven't considered about these transactions. Here you are given 10 transactions. Then at the end of the question, they have given you a format to adjust those 10 transactions. Therefore, on your answer script, you can draw paste this given format by using the given space or available space in a new page, the given format, and start to do. Then part 2, a statement to show the correction of draft profit for the year 31st March 2019. We can discuss part 2 secondly. Then we can draw this format and adjust each and every adjustment from 1 to 10. Here, as you are given opening balances, you have to record first given opening balances in the format like this. Balances 4,500. It is given. Then inventory based on account record 600. They have mentioned inventory 600. Then trade receivables 820. They have put it under trade receivable 820,000 because all the values they have given in thousands. Therefore, no need to put additional 3 zeros. Then you can save your time also. Then prepaid rent 480. Then they have put under prepaid rent 480. Then cash balance 610. Again, they have put 610 under cash balance as at 1st April 2018. Then next item, trade payables 100. Then under liability, first item, trade payables 100, they have put. The next item, accrued expenses 90. Then accrued expenses 90, they have recorded. Advance received also 240. That is also liability. When they purchase their goods, really, they can set off advance given to the business. The last item, capital introduced on 1st April 2018. That is beginning capital, opening capital 6,000. But here, profit for the year ending 31st March 2019, 580. Therefore, when you put the equity opening balance, we had to add profit for the year to the opening capital, then it will be 6,580. That is why they have put equity opening balance 6,508. Here they have recorded. Therefore, no need to worry about that. You also can just put the opening balance available in the question. Right. Now, I will come to adjustment number 1. Depreciation on PPE, that is property, plant and equipment, amounting to 500,000 for the year ending 31st March 2019. As they have mentioned, they haven't adjusted this depreciation. Depreciation is also another estimated expense. Therefore, we have deduct it from capital or equity, because expenses will affect to reduce capital, and also depreciation will affect to reduce the asset value, asset cost. So therefore, here you can take by removing last 3 zeros, then 500 minus 500 under equity. Why? Estimated expenses also will have to reduce equity, and minus 500 from property, plant and equipment. Because why? Depreciation will happen to reduce the asset value, right? Then I will just show the answer, how they have adjusted the answer. Right here, because of depreciation, it will affect to reduce the asset cost by 500,000. Therefore, after removing last 3 zeros, they have put minus 500 under PPE. Again, the depreciation is also an estimated expense. Then it, as expenses affects to reduce equity, they have put minus 500 under equity. You are given 1 mark. Right. Then adjustment number, we can take adjustment number 2 again. Adjustment number 2, we have to read it properly. The rent of the showroom rupees 80,000 for March 2019 has been included in the prepaid rent account. Here, in the opening balances list, you are given prepaid rent. Normally, we pay rent in advance, 480. As they have mentioned, the rent of showroom 80,000 for March, 80,000 for March has been included in the prepaid. If we take 80, now 2,000, actually, we are given these balances at the closing date, no, 480. Then the rent of showroom 80 for March 2019 has been included in the prepaid rent account. Then you can just see how they have adjusted the answer. Here, opening balance our given in the question 480, as they haven't paid rent for March 2019, you can deduct it from opening balance. Therefore, minus 80 from prepaid rent. You know, rent is also an expense. Therefore, expenses will have to reduce equity. Then under equity, you can put minus 80. Minus 80. Right. We'll move to next adjustment. If I just explain that again, the rent of the showroom 80,000 for March 2019 has been included in the prepaid rent account, because normally if we take 80,000, here they have given prepaid rent at the end of the period, but as they have mentioned, 2019 March rent is included in that value, we can set off 80 from that value opening. This is closing balance, as they haven't already deducted 80 minus from this value. And also rent is an expense. Therefore, as expenses will appear to reduce capital, we can put it as minus, right? We'll move to adjustment number 3. Electricity bill of 5,000 for March 2019 has been neither paid nor accounted for as at 31st March 2019. No, they haven't paid, and also they haven't accounted. Neither paid, no accounted means both have not happened. Therefore, we have to adjust. Electricity is an expense. Therefore, expenses will have to reduce equity. Then we can put minus 5 under equity. And also, as they haven't paid yet, we can put it under accrued expenses 5. That is plus. Both will be under liability. Here, as they haven't not yet paid, plus 5 under accrued expenses. As electricity is an expense, it will appear to reduce equity by another 5,000. Both are under liability side, plus 5 minus 5, therefore no effect. Then we will come to adjustment number we'll come to adjustment number 4. Right. Adjustment number 4, the purchase of goods costing 80,000 on credit on 30th May 2019 has not been recorded in the books of accounts. Right. On credit means the business doesn't pay money at the time of purchasing. It has happened in the current accounting period, but they haven't recorded in the books of accounts. That books of accounts means at both places. They haven't recorded at both places or accounts. Then purchases comes under inventory. Therefore, your inventory based on accounting records 600, then plus 80,000. And also, as they haven't paid, trade creditors or accounts payable will be increased by another 80, therefore plus 80. Right, here, as they haven't recorded inventory, we can put plus 80 under inventory. Because of purchases, inventory will increase. And again, as they haven't paid to trade payables or suppliers or creditors, under trade payables, you can put plus 80. You are given 1 mark. Right. Then we can move to adjustment number 5. The sale of goods costing 200,000 for 400,000 rupees on cash. On cash means you have got money on 30th March 2019 has not been recorded in the books of accounts. However, the check received in this respect has been deposited in the bank. That means the money received for the sales transaction they have deposited. But thing is, they haven't recorded the sales transaction. The cost was 200,000. Therefore, your inventory will come down by 200,000. That is minus 200,000 under inventory. Then under cash, you can put plus 400,000 or 400, because as you should, you have received a check, then your cash balance will increase by another 400,000. The difference between cost 200 and sales is 400. You have earned a profit of 200,000 rupees. Therefore, profit goes to equity. Under equity, you can put plus 200,000. We can just look at the answer. Here, 200,000 minus under inventory because cost of goods sold. And as you have sold for 400,000, 400 plus under cash, between this cost and sales value, the profit is 200,000. it will affect to increase equity, then plus 200,000 under equity. Right. You have got 3 marks for that transaction. Then we can move to adjustment number 6. Inventory items costing 40,000 were destroyed during the year and were not in a saleable condition. However, these items had been included in the inventory as at 31st March 2019 at cost, and they did not have a realizable value. Right. Again, I will read. Inventory items costing 40,000 were destroyed during the year and were not in a saleable condition. That means you can't sell it to the customer. However, these items had been included in the inventory. That is wrong. We are given closing inventory. Therefore, it is included 40,000 worth of goods costing destroyed one, damaged one. We can't sell those things in the, to the customers. Therefore, we are removed from inventory. As they have mentioned, they did not have a realizable value. Actually, that's a really loss. Therefore, because of loss, it will affect reduce equity. Then we have deducted 40,000 from inventory. Why? They have got destroyed. As it is a loss, then loss will affect to reduce equity. Therefore, minus 40 under equity. Right. Here, they have adjusted minus 40 under inventory. Why? They have got destroyed. We can't sell, and also they are not in a saleable condition. Because of loss, it will affect to reduce equity. Therefore, minus 40 under equity. You are given 2 marks. Then we can move to adjustment number 7. Adjustment number 7. A customer has placed an order to purchase 40 items. The selling price of these goods was 240,000, and this amount has been received during the year. Right. That means we have got sales values as an sales advance before the customer buys goods from the company. The amount has been recorded in the advance received account. The customer has given an advance, that is sales advance liability. Until the customer buys goods, it is a liability. That's why in the closing balances, they have mentioned advance received 240. We can cancel this 240 when the business sells goods to the customer. Then the amount has been recorded in the advance received account. However, only half of these goods has been delivered to the customer by 31st March 2019, and the cost was 80. Even though they have paid 240,000 for the future sales, even though business has got money, 240,000 for the future sales, still business has delivered only half of that. That means half from 240 will be equal to 120. 120 worth of goods have been delivered to the customer, and their cost is 80. Therefore, we have to deduct 80,000 from inventory because still they have sent to the customers only half of that. That is 120 worth of goods. That is the selling price, but the cost of 120,000 worth of goods is 80,000. Therefore, minus 80,000 under inventory. And also, you can reduce from advance to 200 from 40, another 120. Because still the business has sent them only half of the value. Therefore, you can reduce from 240, 120 from this advance, that is minus 120. Then 120 and 80,000 cost, the difference is profit. Profit is 40. Then 40 will affect to increase equity. Therefore, you have to understand the given sentences. No entry has been made with respect to this delivery. The rest of the goods should be delivered during the next year. Therefore, we can't set off total advance paid, only half, that is 240 minus. Then, as they haven't sent totally, we can deduct from inventory only the cost of the goods sent, that is 80,000 minus 80 from inventory. Difference, the cost 80,000 and the saleable value revenue 120, that is half of advance received 120, will be the profit. Profit is 40. We can add it to equity. Because of profit, it will affect to increase equity, that is plus 40 under equity. We can just see the answer. Here, minus 80, the half of the goods sent to customers, cost, and from the sales advance, we can do that 100, that is the half of advance. Then difference between the cost of goods sent and the sales values of goods sent to customer is profit. Profit will affect to increase equity, therefore plus 40. Then we can move to adjustment number 8. The bank statement received on 3rd April 2019 revealed that a check for 20,000 received from a debtor on 20th March 2019 has been dishonored by the bank 31st March 2019. 31st March 2019, the last day of the current account period, and also bank statement they have got in the following month, 3rd April. The check was 20,000 value from debtor 28 March. That means it also happened in the current account period. That means they have got dishonored a check. Therefore, it will affect to again increase customers' value. And also, there will be decline in the value of bank balance because it is not realized. If they have got dishonored, that means bank doesn't credit to the business account. And also, it will affect to increase again debtors value by the same amount. Then, under accounts receivable of debtors, minus 20 earlier, now you have to again add back because when they send the check to the business, minus 20, but now as it has got dishonored, again, we can ask money from the customers. Therefore, plus 20 under trade receivables, and from cash minus 20, why it did not get realized. It was not realized by the bank because that is the meaning of dishonor. Therefore, minus 20 under cash and plus 20 under trade receivable. We can just see the answer here. Adjustment number 8 under trade receivable plus 20. Why? As their check got dishonored, we can ask another check of money from the customer. Therefore, plus 20. As they have dishonored, then there will be decrease in the bank value. Then under cash, minus 20. You are given 1 mark. Then we can move to adjustment number 9. The bank statement also revealed the check of 50,000 has been deposited by debtor directly in the bank on 31st March 2019. This amount has been written as an irrecoverable amount when preparing the draft financial statement. That means the bank statement also revealed that check for 50,000 has been deposited by debtor directly in the bank last day of the current account period. The amount has been written off as an irrecoverable amount when prepared draft financial statement. Right here, that means the debtor has paid their value again because first time business has written off as bad debt, but again debtor has found money and paid it to the business. Therefore, when you write off debtor's value as bad debt, what do? You deduct it from debtor's value or accounts receivable and you deduct it under equity. Why? Because of loss and expenses, it can have minus effect to the equity. Here, again, they have got money. Therefore, we can take it as income. Therefore, as you have got 50,000 directly to account, you can have increase in cash. That is plus 50,000 under cash. And again, as you have to consider it as an income, because of income, there can be plus effect under equity. Then under equity plus 50,000. It is easy. You again think, when you write off debtors value as bad debt, it's a loss or expense, therefore minus effect to equity and minus effect to trade receivable. When they pay back to the business, again, you can consider this as income. Then plus effect under equity and plus effect to cash. Last adjustment, the bank statement revealed 2,000 paid by the business as examination fees of the owner's file. That is drawings, no? Businessman or owner cannot use business money or goods for their personal use. If they have used it, they are called drawings. Then because of drawings, there can be minus effect to assets and equity. As they are used 2,000 under cash minus 2,000, because minus cash will come down because of these drawings. And also because of drawings, equity will come down by another 2,000. Then under equity minus 2. Right. That is how you can adjust given adjustment from 1 to 10 under the given format in the paper itself. Right.